Hi and welcome to this Blueberry Markets video update with me, 𝖢𝖥𝖣yi, head currency analyst. In this video, we're going to be taking a look at the week ahead analysis. We're going to go through the news and some charts of interest. So heading back to a week full of data, including loads of central bank speeches, as well as some interest rate decisions from central banks. So you can see here we've got 𝖢𝖣yi, which was speaking on the Sunday, as well as Monday, as well as Wednesday. So lots going on in the UK this week with the Bank of England 𝖢𝖣yispeaking, and the Bank of England have been under a lot of pressure recently due to the fact that they're continuing to rise those interest rates or raise interest rates. And now some economists are seeing that the fact that the Bank of England may have to go to 7% rates as inflation continues to remain fairly sticky in the UK. And that's going to be a potential problem for the UK as well, because although the anticipation of hiking interest rates is usually seen as a good thing for a currency, there is also the point of that it's starting to sort of bring down employment. It's going to start to have a negative effect on people being able to borrow money, businesses being able to borrow money, and what it does is basically starve the economy, and it's to bring those inflation rates down essentially. However, they've still got a problem with the wage growth in the UK. And the way the interest rates are going at the moment, it could even go beyond 7%, really speaking, which is going to have a massive impact on the UK economy. And so it's going to be really interesting to see what happens there, how the market takes that one. We then have central bank announcements out of the RBNZ. You can see that we're projected to keep rates the same at 5.5%. You can also see that we've got RBA Governor Lowe speaking. And then we have Bank of Canada rate statement. Bank of Canada expected to hike interest rates to 5% from 4.75%. So a little bit of a rise there. US data, we've got CPI and core CPI. We are forecast to see a little bit of a decrease in both of those, apart from CPI month on month, which is expected to grow from 0.1% to 0.3%. Dollar obviously had a little bit of a poor performance coming into the end of the week, so it'd be interesting to see how this US data comes out. We then obviously have core PPI, and unemployment claims at the end of the week as well for the US. So a very turbulent week, and typically in these turbulent weeks we do often see the market move to a bit of risk off, and that's what we have seen coming towards the end of this week. We can see that the yen is starting to come off the strength meter lows. Pound has been one of our strongest currencies at the moment. Dollars remained at +2. Going into the dollar index, you can see the continuation move that we were talking about in our live streams. We were talking about how is price going to react above 103? Does it get above the 103.50s? Does it continue to remain within this bullish channel? However, the weekly was the sort of telltale sign for us that price maybe was going to move to the downside, because although all week we pretty much moved sideways, the previous weekly candlestick was quite a shallow one, and I expected maybe a bit more of a move down towards the 102s, which we eventually have started to see. So potential for further dollar downside could happen going into this week. One of those currency pairs that were affected by that as well was dollar yen. We saw the market return back to a bit more of a risk-off sentiment. Dollar yen turning at that 145 handle. I've just readjusted a couple of the levels. You can see I've marked in 140.50 here, and that could be the next point of interest for dollar yen. You can see its previous structure highs in here, and if the market is technically making higher highs and higher lows, I would expect these highs to be tested. So maybe if we get a bit of a pullback this week, it could offer sellers an opportunity down to the 140.50 handle. Cable was another one on our watch list going into last week. We like the bullish weekly trend that we were getting here. We like the break above the 1.2650. I really like the move up to the 1.3 handle, and price broke through that previous structure weekly high now. So again, if we get a bit of a pullback, it could give buyers an opportunity to look for a move up to that 1.3. Finally then, gold. So if the dollar's going to underperform, I would expect gold to perform a little bit better, although we haven't seen a huge amount of strength coming into this market. We have had a couple of weeks of consolidation after retesting 18.90. If that dollar doesn't come back and doesn't strengthen, then we could see a move back to the 19.50, a break through that, and then maybe a move back up to the 2000 level for gold. So definitely something to keep your eyes on. Obviously last week, at the end of last week, we saw that risk on off move as well. Stock markets declined and things like that. So I'll be watching that. Volatility index also increased. So as volatility increases, we do often see the market move more into that risk off mode. So we could be seeing commodity prices like oil move lower. We could have gold move higher. And then you could also see the yen sort of strengthen off the back of that as well. So that's something to consider going into this week. Thanks for watching this video update. I hope you enjoyed it. If you did, leave it a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content. I'll speak to you in the next video.